Hey there, everybody. Thomas with Basecamp Trading. It is Tuesday, June 6th, and we are going to take a look at another price action setup, and we're going to continue with the series regarding common mistakes that traders make when they first start trading. And one of those mistakes is not knowing the behavior or the way that the market moves that you are trading. Because not all markets move the same way. They have what we call different personalities, okay? For example, one of the reasons I like trading the Russell is because this market will break out. Majority of the time it's going to be consolidating, and then it will break and it will run, and then it will consolidate again, and it will break and it will run, and then it will consolidate again. But if you don't understand how the Russell moves, then you're not going to know the best way to trade it or some of the most effective ways to trade it. So one thing I always encourage new traders to do is look, before you start trading, go learn how that market moves, learn how to trade that market, and then start trading live. So learn it simulated, get used to that market's personality, and then go live with it later on. For example, in the Russell, we had a couple different trade opportunities that worked out fairly well. The first one was, first thing in the morning, we look for consolidation breakout. So market opens up, we start going into consolidation, then trend shifts here. We put in a higher high compared to the last high, and we put in a higher low compared to the last low, and then we break to the upside. Okay, and that's what this big up bar is here. Then right here was the trade setup, and that was a bull flag on the 2-minute chart. This happened on the S&P and the Dow and the NASDAQ as well. You had a bull flag set up, and that triggers when you break the previous bar's high right there, and that gave you your long entry, and we rode that right up to resistance from the highs of the day, and then got back out of it. And then Russell went back into consolidation again, and we said, okay, well, the next entry for the Russell is going to be a breakout of this new consolidation. So that was either a break below 1390 or a break above the highs here at 1393.80, 1394 area. So we ended up breaking to the downside, and we dropped down yet again, dropped right down into what we call a dragonfly doji. And the dragonfly doji, you would have been taking profits or trailing your stop just behind that bar's high, got right back out for another quick scalp in and out. And it lasted about 6-8 minutes. Okay, and then we consolidated again. But the reason I say this is important, and the reason I'm always telling people make sure you learn the personalities of that market, is because if you don't know how the Russell moves, then a lot of times I see traders get chopped up trading the Russell, because they get in here and they try to trade this mess right here when it's consolidating, or they trade this mess right here when it's consolidating. And we don't trade it when it consolidates, we trade it when it breaks out of consolidation. Okay? So the major point for today is make sure you learn the personality of the market you're going to trade before you actually start trading it, because each market moves differently. Some move faster, some move slower, some consolidate and then break out, some trend really well. All right, so again, learn the personality of the market. Take a couple of weeks at least to follow that market and see how it works intraday and end of day, depending on the type of trading you're doing, and then start trading it once you start understanding how that market moves. All right, that's all I have for you for today. Don't forget to click that like button and to subscribe to the channel if you want to continue to get these types of educational videos every day. And until next time, happy trading.